Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Well, it's already Wednesday. Of course, it helps when you took Monday off, but we do have a couple of things going on this morning that could make trading a little bit tricky. Just comment to the charts and then we'll talk about that. Okay, so we do have some rollovers here. Bitcoin is rolling over and natural gas. Come on. There we go. All right, so over here in the Treasuries, well, we kind of had that push down after the news, and they did eventually recover it after I gave up on it. But here in the overnight session, they're falling back down in there. And on the open, not a whole lot of direction. When we come into the E-mini, they did have a bit of a drop after we left, but they recovered that. Google earnings really bad. Microsoft earnings pretty good. And earnings are in the spotlight, seem to be driving the indexes right now. And get to oil. Oil took another little dive lower yesterday. I don't know. Is this because people aren't as concerned about the Middle East? Could be. Here we got silver and gold. Copper taking a little bit of a pullback after seeing a rise. That's a pretty good movement there. So when we come back out, I guess Bitcoin holding these gains. This move is a little suspicious to me, just because there is not actually a clear catalyst for it, even though it very much looks like there must be a catalyst to it. And it seems to me like this is more like hopes over the ETF, which again, I just really don't think is happening. So, and then we've got the dollar, the dollar strengthening considerably yesterday, and we are back above 106 as it extends a little bit overnight. And that's probably one factor why the treasuries have pulled back a little bit. So coming back over here, make sure we got our news squawk going correctly here. We don't have any news at the bottom of the hour. But we do have Bank of Canada rate statement at 10 o'clock Eastern time, as well as new U.S. home sales, a 5-year auction, and then a bunch of Fed speakers today. We got ECB's President Lagarde, we've got Powell, we've got I thought we had more than that, but Macklin. Yeah, there's a couple. So the Bank of Canada rate decision is usually not super impactful, but it has been as of late. So it might make trade here for the first hour a little bit iffy. I mean, I was kind of coming in here feeling like pretty good, like I got ready good, like my executive functioning seems to be working really, really well. But that open there makes me think that I don't know if there'll be a whole lot of opportunity for us. We have a stream of important news tomorrow. Well, let's see here. We do have, we got GDP tomorrow. I mean, overall, this is kind of one of the more sparse weeks for economic news. Next week we get, jobs numbers again. So UCB announcement too. Oh, I have to turn on the other currencies. Oh, the ECB press conference is tomorrow. Yeah. Well, so far on the open, they've been selling it, and there actually has been some pretty significant sells in here. Which is not exactly what I was expecting, but nah. Is it going to be earlier in the day tomorrow? It is. ECB press conference 6:45. You know what? If I can avoid the ECB press conference, no, we'll be here, right? So there was a little bit of dumping there, but I so far I'm not sure if that's actually like anything significant. It's probably just traders trading, right? By the way, lots of people showing up here early today. Thank you very much. Lucas, Dom, Alan, Uzi, Jiwi, Octavius. Make sure you give the stream a like. That's y'all pretty active today. Is that you feel bad for me taking a loss yesterday and you want to see me revenge trade? Is that what it is? Oh, hey, ATAS. I've never seen you guys in here. I'm super excited to have you. You know what? Making a trading platform is so effing hard. It really is. I do not envy you guys. I don't know a whole lot about you and your platform and what you've got going on, but you know, I talk to Jigsaw a lot. And it's not fun. It's really hard to offer a competitive product. You know what I mean? Do they offer? I'm pretty sure they do have a DOM, right? So like, maybe the best one out there. I tell you what, doesn't ATAS have the cross instrument trading? Do you have cross instrument trading? I think you were the first ones to implement that, weren't you? Or maybe I'm thinking of somebody else. Jigsaw recently added that in, so it will show me the ES data, but if I were to put trades through here, it would put them in MES. That is like it. I think that should be an essential feature, you know? I think that should be an essential feature. Where can you learn to trade like me? You can't. But I do have an order flow video series, and that's a good start. But the only, number one, you don't want to trade like me because it's geared specifically towards me. But then number two is that a lot of what we're doing requires you to just come in and watch every day and read the order flow and the news and kind of incorporate that in little bit by little bit every day. So it's experience. So that's what it would do is watch my beginning order flow series, learn about the stylized behavior of markets, and then just come in here and watch the stream every day and discuss with us what you're seeing. And that's how you'll get to where I think you want to go. But don't trade exactly like me. That would be, if we all traded like me, that would be bad. Because we would start to have an impact and it would reduce our edge. Yeah, well, you added trade copier a few weeks ago and you get cross trading soon. Cool. So the one, I tell you, the one that's missing for me on Jigsaw, I have it on NinjaTrader, is like spread charts. So, I have the spread between the 2 and the 10, the 30 and the 10. Here, actually, let me like circle it so you see what I'm talking about. I also have versions of it if you come over to these volume profile charts. I have versions of it that uses candles. But that gets into all sorts of weird stuff because like the highs and lows aren't necessarily the actual high and low of the spread, right? So the data that you're showing, I actually have versions that will, well, I don't have it turned on that chart, but for instance, if you come over and look at my dollar index here at the bottom of the screen, which is a spread, but it's like a kind of like a spread, but it's a spread between like 6 instruments, right? And you see how this is gray. This is, okay, we weren't live at that time, so the data that we have about like what the highs and lows were aren't completely accurate. But now, since then, since we've been live, that's colored in. We know that that's 100% accurate. Right? So, I kind of would like to move from this complicated setup that I have to just using Jigsaw, because, somebody new comes in and they want to have their setup exactly like mine. You have to set up Jigsaw and Ninja, and I'm not necessarily a fan of NinjaTrader brokerage. That's a whole mess. So I would like to keep it simple so that they can just go, oh yeah, I get edge clear, I get Jigsaw, I'm good to go, right? That's what I think would be best for people. But there's still a few features they're missing there that makes me have to keep NinjaTrader up. And these are kind of things that I feel like, how are people trading without? Like, how do you trade without knowing what the dollar is doing? I just don't get it. Because these days, especially, it seems like all assets are just moving in correlation with the dollar. Like, we're all dollar traders half the time. So how are you trading without the dollar? I don't get it. Right. Now, to be honest, with ATAS though, I don't think you're gonna make a better DOM than Jigsaw. But you have to find like your niche, right? Your program, oh yes, that's right, they are in C#. So I like it, being in C# makes it easier to write things for it, right? That really helps. One of the things that I think is kind of missing or flawed in NinjaTrader is how it handles historical data. So like historical data is all put into this like, database. There's like the database management screen, and then you can come in and like, no, that's not it. Where is it? It's not database. It's historical data maybe. Okay, here we go. And then this tells you like what kind of historical data you have. But it just seems like a complete mess to me. And you can't save like the level 2 data that you get. So that's one of the problems that I've had is like, I want to use level 2 data and backtest on my full market depth data. You can't really do that in Jigsaw, so you have to save it yourself. So I've been doing that, but then there's a couple of other kind of strange edge cases that come up that make it a little bit difficult. And you have to save the data up, which I've only been doing for a year. And then I would want to connect it up to machine learning. But because in order for me to use the latest version of NinjaTrader that would give me access to the latest version of .NET so that I could use some of these libraries, you basically have to be on NinjaTrader brokerage, right? So then that's kind of put that project on hold. And I basically got into, I'm just exporting it to data files. I'm just going to do it all with Python is what I think I'm going to do. So it's like, Yeah, so another you want me to I could try it. The one thing is, do you support the rhythmic plugin mode? So if you support the rhythmic plugin mode, then we're good to go, right? Then we're good to go. Yeah, you can send me one. Just email me at speculatorseth@protonmail.com and I can try it out. Their DOM has to be better than NinjaTrader, right? But I would think though, ATAS's real competitor is Sierra Charts, right? Probably. Oh, that was an aggressive take there at 05. Yeah, better than NT is the bare minimum. Well, it's so interesting because I really think that NinjaTrader has like the best chart setup of the futures trading platforms. I think the best charting setup is TradingView, but I digress. And it definitely has like the best programming and ecosystem, right? But ATAS is C#, so it should be somewhat competitive. I'm gonna bet if so they send it to me and I go through it. I'm gonna bet that like all of the recommendations I have for them are on the programming side. Yep, TradingView doesn't have good data to work with. No. But when I'm looking at like stocks, I usually use TradingView. So all in Python, yeah. Well, so I've done a couple of different things and kind of keep running into roadblocks. So the last thing that I tried doing was I wanted to try and incorporate what I was doing into a ChatGPT-like model. And I wanted it to be able to listen to me. So like a whole Jarvis kind of setup. And I can do it. But it requires so much resources on your machine. I cannot do that and stream at the same time. So that's why here in the holiday season, I'm going to build a new machine so that I can have a second machine that's doing all of the number crunching or whatever for the machine learning algorithm. And once I have a good number crunching machine for that, then we'll see about like doing the Python and so forth for back testing on bull market depth. Nardo style training. I've never heard of that before. Man, you doing something. You're doing something either super cool or super lame if I've never heard of it before. Do you think teaching the public... sorry, what are you... Sometimes it hides words. Do you think teaching the public in a course what you are doing? So... I think that almost all of the information that I could really teach you in a course is contained in my order flow video series. If I taught a course on it, we would just go deeper. You know, like if I was going to teach a course, it would be on like the really deep quant side of things. Like take the trades, quotes, and prices book and teach a course with it, right? But I don't know if I'm really the most qualified person to do that, you know? And I'm pretty sure that there are people at universities teaching similar courses like that, you know? But that's kind of the problem here with trading, is that there's so much to know. Like you can literally spend your whole life learning about the market and only know a teeny tiny little fraction of a percentage about everything that there totally is to know, especially when you're getting into information about the current market, you know, so information that might tell you things about current supply and demand and so forth, right? So the only way to approach that is to just come in every day and watch what the market is doing kind of interpret it. So let's kind of try and do that. This is what when you're watching the stream, what I would hope you're doing is you come in and say, okay, what are the flows that we know about? Okay, well, there is an ECB meeting today. Okay, and there is some other news at 8 o'clock, and there's some Fed speakers, right? So normally that would be kind of hold people back from wanting to take trades, unless they were really trying to front run the Bank of Canada decision, right? We have been seeing less demand from foreign buyers. That's something that we know has been going on. We did see, that covering after they mentioned Ray Dalio on Monday, right? So that's kind of like the context that we got going. So I don't have any information that would suggest selling like we've seen here today. I would say, though, we've done more than 10,000 contracts short. There is definitely some degree of large meta order sell in here today. And I'm not seeing any correlations, right? It's not really moving with the dollar. The 6J isn't really moving. Even the metals. I guess the gold has kind of come down. But I would say any kind of correlation, and there is real volume coming in. There is a real change in cumulative delta. So we have seen large meta order market selling in the treasuries, but we don't know what the origin of that flow is, which makes it very difficult for us to try and game out if it's going to continue or not, right? The more you learn, the less you know. There you go. So, but that's what we're trying to do, is we're trying to look at what news do we have and then try and match it up with what the market is doing. And then sometimes we'll get a situation where there's a flow that we know about that's about to come that's not accounted for by the market, right? And you do that day in, day out, day in, day out. And that's accompanied by reading a lot of news, reading a lot of analysis from like prominent Wall Street research outfits. And you just have to do that every day for years before I think you'll really be in a good spot. That's what makes trading so hard. Oh yes, that's right. I was searching what is NADRO. And the first one is some narrative acceptance, developing value, rhythm, order flow. Okay. Sounds like, to be honest, it kind of sounds like marketing, but you recommend my favorite book is Trades, Quotes, and Prices, Financial Markets Under the Microscope by Jean-Philippe Bouchot. And that will teach you the really deep mathematical quant stuff that explains why markets behave the way that they do. And it gives you a couple of little hints that I think can optimize your trading. Kind of help you interpret the order flow. Warning you though, it's a heavy book. I can't tell you how many times I've like recommended that book and people go out and get it and then they're like, I can't keep up with the math. But you don't need to necessarily understand all of the math. What you do need to understand is the implications, which I think they do a very, very good job of summarizing after they prove the math to you. I think the 5 and 10 year are trying to fill the gap lower. I don't know about that one. What gap lower? Unless you're saying that they're going to start retracing this whole thing from Ray Dalio all the way down to like 24.5. Which would be like a crazy sell flow. That would be a little scary again. That would make things a little scary again. What I will say, though, is that we're getting a slightly above average amount of activity. A flow that was unexpected. For sure. I feel like I missed something on here, but I think I'm caught up, right? If you asked a question or you made a comment and I didn't like sufficiently address it, you can always just repeat your question, right? Yeah, I'm not quite sure what to do about the Bank of Canada thing. I can think of many instances in the recent past where I like wanted to take a trade, but like the whole Bank of Canada thing kind of like prevented me from really being able to execute something effectively. So, but it's not like the market is just kind of like dawdling around waiting for that to happen. Something is happening now that I can't completely explain. Now, that move might be over. They've definitely kind of created a liquidity hole, or at least the beginnings of a liquidity hole at 0.2 half. I wouldn't say it's like super strong, but does seem to be there. So we might chill here for a little bit. They might just retrace that move. I don't know. Like the thing is because I don't know what is driving this flow. That's really no way for me to be able to tell if there's going to be another leg or if somebody's going to try trading against it or what. Here, I would say that the market probably is a little bit vulnerable to a reversal here in the next, few minutes. Let's say like 10, 15 minutes. So far, not that I've seen any kind of flow come through, but well, let's come over and check headlines on the financial websites to see what they're talking about. Top stories on Zero Hedge. Elon Musk warns we are sleepwalking our way into World War III. Okay. Taylor rule signals Fed is already done hiking. I guess we can read that. Boycott UFC calls soar after mega sponsorship deal with Bud Light. For real? I cannot believe that they would make it. I mean, I guess if Bud Light really gave them the money, I don't know if I would boycott the UFC though over that. Just boycott Bud Light. Let Bud Light spend all the money they want and give it to things that I enjoy. I don't watch UFC, but let's just say that I'm a big UFC fan, right? Then my attitude would be like, yes, give the UFC all of the money, but we're still not going to buy your crap product. Right? So you built another FX model based on co-integration? I still haven't had the time to get into that. I tell you what, my performance as of late in the futures has just not been good. And yesterday, I kind of took a little gamble and it was dismal for me, right? And I feel like that a large portion of it is that I just haven't been really focused lately. I just got too much going on, like at work. We dive into issues every day, and it's like a deep dive debugging and stuff. So it might be a while before I'm comfortable enough at the new job to to really get my mind in the space. I feel like I'm there this morning, but I just didn't have a setup. I'm nominating Alligator for Speaker of the House. I tell you what, Alligator, he's the other administrator on the Discord, and he was like there the first day, because basically the way the Discord happened is there was a thread on Futures.io, and I was like, oh, let's try Discord. So I created it, and Alligator came in, and he showed me some of his trading that I was quite impressed with, and he's been doing it a long time. And he's been there. He's not there during the summer, but he's been there the whole time with us, since 2016 basically. And I really like that guy. Anyways, so I want to get more into like this co-integration and stuff. Every time that we have this conversation, I'll go to archive.org and try searching for stuff relating to currencies. I really want to see something like trades, quotes, and prices, but about specific instruments, stylized behaviors that happen in specific instruments or specific categories of instruments like FX, that could potentially help us. Because if we knew like stylized behaviors of the dollar, since we're all like basically trading the dollar now, that would be like super useful, right? But every time I go searching, I just don't find anything. Are you afraid of taking a new job during a recession? No, not really. So number one, I'm not 100% convinced there will be a recession. I tell you what, that thing is so weird because, like I said, there's been like a poll recently where like 80% of CEOs were expecting a recession next year. I mean, there's a couple of things that are like screaming recession, but then you look at the day-to-day of the market and it's like, no, it's not going to happen. The market doesn't seem to think that we're heading into a recession. But then the second thing is it has more to do with the job and everything else, right? They offered me a big enough bump in pay that I really just could not ignore it. It's also a pretty important role. So like, and it's in a company that's actually growing quite aggressively right now. So I think that if there was a recession, that I would probably be okay. I mean, you never know. Last time I felt like that was 2008, and I did get clean. But here's the other thing, is that the skills that I have are in demand enough that if the new company decided that they had to downsize and they're going to downsize the new people, I would very easily be able to find a different role. Even if it was a recession. You want to take a look at my model? I mean, now is probably not the best time, and I don't know if we want to show it on stream, but if you can like send me the code, I will definitely take a look at it the first chance I get. Okay, if your trading is good, why get a job? So this is kind of, I think, a myth that like you're going to come in and you're going to trade really amazing and then go and quit your day job and trade full time. The number of people that actually successfully do that is like less than 1% of the people that try, and especially in the futures. And the thing is that if you're starting with a modest portfolio, it's going to be very difficult for you to get to that point where it would completely supplement your income. And even then, trading is like inconsistent, right? Like I find a lot of the times that it's like you just kind of break even most of the year, and then there's like 1 month where you just do amazing. So that's a little stressful. You're working, you're living off of that. So I do not believe that it's very practical for most people to try and have trading be their sole living. So I do it more as a hobby. And the amount of money that I risk out here is very, very small. Like, I'm not doing very well lately, but we're talking about like $100 drawdown, right? No big deal. Something that I could easily replace every month if I needed to. I also think, oh yeah, in Excel, it's in Excel. Well, I would want to do it in NinjaTrader. You know, just give me some time. Eventually, I'm going to get the time here to be able to go in and mess with it and create one of these in NinjaTrader, and then I can go back and look at the ones that you've done and double check them and see if there's a difference. Well, I'm getting a little bit of selling coming through here again. They're not getting through the hole yet. I have not, well, maybe I have heard of the Zorro project. That actually sounds familiar. Algorithmic trading with C/C++? Yes, I have seen this before. My recollection is that it didn't support my data. My recollection is that it didn't support my data. First steps, here we go, getting started. Yeah. They support FXCM, IB, and MT4. So, like, the data platforms that they're supporting kind of, like, don't give me a whole lot of confidence. I bet it probably works. I don't know. I think one of the things when it comes to programming, I really think that if you can be on like C# or Python right now, it's kind of to your advantage as a retail trader, just because, yeah, you're going to need the speed of execution, right? But the issue with a retail trader is usually not the speed of execution. The problem with a retail trader is usually finding a tradable strategy to begin with, right? Like, even if you have C++, you're not going to compete with these algorithmic trading firms that are co-located and have thousands of people working on their infrastructure and stuff like that, right? So you're going to want to try and find inefficiencies in the market that haven't been discovered. And so I think that having the advantage of using artificial intelligence and machine learning and all of those sorts of things are a huge benefit. And those things are very, very difficult to do in C++, and the libraries aren't very mature. A lot of algorithmic trading firms have complained about this, where like they'll have algorithms and they're working pretty good, but then the edge starts to disappear on them, so they need to be faster. And so then they have to convert everything over into C++, and it's very hard, and they often have to write some of the stuff, like the models that it's working on, from scratch, right? So as a retail trader, I think that I would rather work in Python. But I think that there are some projects out there that kind of help you with backtesting in Python. So, yeah, Xian at the lows still. Like I said, there is a bit of a liquidity hole here at 0.2 So I would expect there to be more liquidity at 0.2, 0.1 0.1. You can just see that right here at 0.2 that they have traded through it about 2,000 contracts, but it's still reloading. Right, so that signs that we're in a liquidity hole. So all that means is if we are going to get another move down, it's going to require a little bit more volume than it normally otherwise would in like a completely free market. No, I shouldn't say a free market, a normal market, right? Normal liquidity. But there is some selling coming through. It's just, it's going into the edge of the liquidity hole, and it's not enough to cause a dislocation yet. There's still a lot of large trades on the sell side executing in this lower distribution. C# is my day job. I looked at Quant Connect, but no order book data from them for backtesting. Yeah, you know, I haven't. Well, I take that back. For ES. Oh, I don't remember who it was from. It was a few $1,000s for the data though. I don't remember. Basically, somebody gave me a data set that it wasn't market depth. Oh, we're talking about market depth, huh? No order book data. I don't know if there's anybody out there that will give you the full order book data. I honestly think that the only option there is to do what I'm doing, is to record it yourself. Right? Yeah, see, but do they sell level 2 data? No, I haven't looked at that. Anyways, I have data that's like every buy and sell order in ES. But not level 2. That's why it's like, you know C#. What I've been doing is in C#, taking the data that I get and exporting it to files every day. And I've been doing that since October of last year. So I have a year's worth of data. So it's about time for me to start, trying to utilize that data. But what I'm waiting on is the new machine. Maybe I shouldn't be waiting on the new machine, but I don't really have the time to work on it right now. Anyways, gotta finish the table. Gotta finish the new desk. That's kind of been my weekend job lately. But I'm going to create a data platform, because you got to do things, or a data pipeline rather, because it's got to be like the new data comes in, and then you have to reconstruct the order book yourself. And then once you've reconstructed the order book, turn that into data series that machine learning algorithms can actually try to do something with. So, and you don't want to do that every time that you do your back test, right? So you want like these batch processes, where it goes from one into the other. So one would be to reconstruct the order book, and then another one would be to create a bunch of different features, and then another one would be the actual machine learning part of it. Trying to use machine learning to come up with an actual tradable strategy. So, and what I'm going to do, my plan is to, on the new machine, or not on it'll be the old machine, basically. The old machine, I'll have like a Kubernetes cluster running, and I'll have all the stuff run on that. And then I'll create like an airflow pipeline that, once the file is closed, it'll go and push it through all of those processes. That's what I'm going to do. I have a whole infrastructure. That way it'll be scalable. That way, if I start a hedge fund with it, they can just run with that. They won't have to completely redo the infrastructure, because it will already be clouditized, essentially. Yeah, we'll see if I do it. Sometimes I have like really big ideas and I don't do them. The thing I'm working on right now also is the Series 3. I spent a decent amount of time studying for the Series 3 this weekend when I was up in Canada for a funeral. So my plan is to do that maybe in January, take that test maybe in January, and then start building my pipeline. Oh, I missed this question. James asked, do you watch the Bund as well? I wish, but I don't get Eurex data. And I'm not willing to pay extra for that. I think that it would be useful for me to be able to chart the spread between the Bund and the Treasuries to see if, we're seeing some sort of a divergence between them. Because essentially, I want to know, like, where is the money coming from and where is it going to and all of those sorts of things. So the more relevant correlated markets I can see, the better. And the Eurex is probably the one that I'm, missing. Like if there was the next piece of data that I could get that would help, it probably would be the Bund. So I should note that the 5-year came back quite a bit there, even though the 10 and the 30 are still kind of chilling out in this liquidity hole area. I'm gonna remove these at least. Oh, actually, I can resell all of them. I can resell. The ZN did have, again, a decent amount of selling, like 5,000 contracts worth of selling into the lows that didn't seem to do anything. And it's been what? Because this move ended at 645. So I would think that, the liquidity would probably still be a little fraught down here for the next 30 minutes. They're maybe still vulnerable to retracing this, though. I'm going to bet you that there's probably a little bit less liquidity on the offer here than there is on the bid down here. So we can kind of factor that in. Oh yeah, so we had this story from Bloomberg I was going to read. So let's read that. This is by Jessica Minton, Bloomberg Markets live reporter and strategist, which says the Taylor rule signals the Fed is already done hiking. The pain in long-duration growth stocks, fueled in recent weeks by a relentless surge in Treasury yields, is finally on the verge of subsiding. That is, at least, if the so-called Taylor rule is anything to go by. The equation, posited by Stanford economist John Taylor in 1993, has become a way to measure how the Federal Reserve can use its overnight bank lending rate to tame inflation or stimulate the U.S. economy. Now it's approaching a critical inflection point for the U.S. equity market by signaling that the central bank has finally normalized rates. The calculation calls for a higher terminal rate when price pressures are anticipated to be higher than usual, and all else being equal, a lower one when economic growth is expected to be lower than usual. The spread between the federal funds target rate and the implied rate by the Taylor rule peaked above 10 percentage points in early 2022, suggesting the Fed was well behind the curve at the start of the current cycle, according to Gina Martin-Adams, chief equity strategist at Bloomberg Intelligence. But now that spread has dropped to its lowest level since early 2021. So if the consensus is correct that core inflation will continue to ease, the federal funds rate may finally be hitting its cycle peak. Naturally, the next question for investors is just how long will the central bank keep rates high? The Fed is pretty close to being done, particularly because the bond market is doing the work for them by tightening financial conditions, said Julie Beal, portfolio manager at Kanye Anderson Rudnick. That's a mouthful for a name. While investors can't ignore how strong the economy is, the Fed is scared of repeating the 1970s where they misjudged the staying power of inflation. So they will likely hold rates higher for longer than needed. Still quite a bit here to read. In the run-up to the Fed's November 1st policy decision, investors are looking to figures later this week on economic growth, inflation, and consumer spending that will help determine the trajectory of central bank policy for the remainder of the year. Economists expect Thursday's GDP data to show U.S. economic output accelerated to 4.5% on an annualized basis in the third quarter, up from 2.1% in the 3-month period ending June. Policymakers have taken comfort from a slowdown taking hold in the U.S. in key underlying measures of inflation, including the Fed's preferred inflation measure. The annual core personal consumption expenditures metric, which strips out food and energy, fell below 4% in August for the first time in nearly 2 years. The consensus for core PCE to slow by 2.6 by the end of 2024 as the unemployment rate rises steadily to 4.4% by that time. These two forecast inputs to the baseline Taylor rule model suggest the current federal funds target rate is spot on the level implied by the equation, according to Jillian Wolfe, a senior analyst at Bloomberg Intelligence. Home stretch here. What's more, a steep climb in bond yield since late June has coincided with an 8% reduction in the valuation premium that high duration stocks have had over their low duration counterparts, data compiled by Bloomberg Intelligence show. Generally speaking, big tech companies are particularly susceptible to fears of higher for longer rates because many of them are valued on projected profits delivered years in the future. The present value of those future profits are worth less as yields rise. Oh, I've never heard it put that way. I've always heard it put that, they use debt to fuel their growth. Okay, the highest duration sector in the S&P 500 index on average is communication services, including shares like Take-Two Interactive Software Incorporated, AT&T, and News Corp. Why is Take-Two the communication services in the same boat as AT&T? That doesn't make much sense to me. Okay, whatever. In fact, medium top quintile of BI duration stocks within the benchmark equities gauge saw forward price to earnings multiples contract more than 13.6% as of Friday from 3.84% on June 30th. Bottom quintile stocks, meanwhile, have experienced valuation compression of just 6.3%. High duration shares still trade at a hefty premium compared with their lower duration peers. High duration growth stocks that aren't profitable will continue to be pressured with rates elevated, so it will be hard for investors to stomach. Kanye Anderson Rudnick Bill said, but I'm more concerned about a divergence in the companies that can continue to maintain their pricing power versus those who may face further margin degradation. Okay, so the Taylor rule should mean that rates are normalized, but now that rates are here and they're likely to stay here for a while, that's going to really squeeze a lot of people. Okay. So while we were having that, we are up another 2 ticks or so. I'm seeing pretty consistent flow long in the 5-year, but I'd say it's pretty tepid. So that doesn't rule out that there could be another sell. Does kind of suggest to me, though, that the market may be in wait and see. Because, really, 7:30 would be maybe the time when you would see another move, and that coincides with the equities open. And then it's 30 minutes from that to the Canadian, the Bank of Canada decision. So I don't think that presents us with very good timing for a trade. But let's just take a quick overview. Okay, so the 10-year yield did drop a basis point, though, but it's kind of a little, in fact, they're coming back there. S&P 500 over the last 30 minutes or so has moved down a little bit, just kind of retracing some of the upside movement. And when we come over here to these charts, gold was coming down in sympathy with the treasuries, but has now busted up higher. As has the Japanese yen didn't really follow them down, but the Japanese yen is seeing a slight rise here. All right, so just switch this over here to Bitcoin. Bitcoin seems to be not stopping. Overall, biggest winner today, natural gas. Biggest loser, the 30-year bond at the moment. And pretty much everything is down for the session again. Just what we've seen a lot here lately, where it's just like interest rates go higher and everything sells. Okay, so we got the open here in about 15 minutes. This is a good time for a commercial. We haven't been doing a good job with that. So, and YouTube does like it. So let's insert an ad here. That'll put you in a 1 minute ad, and then you'll be back here. And those of you guys, all right, so here's the interesting question: how many of you are still here, do not see the ad? Because like YouTube started doing this stuff that like blocks the ad blockers, right? But there are ways around it. So how many, gave up and started letting YouTube show them ads, and how many of you are still are still blocking them? I'm curious. Oh, Viota says that it was only like 5 seconds. Oh, you went to premium? Really? That's interesting. Tell us the way around it. Well, so my understanding is that it blocked like the big one, AdBlock Plus, on Chrome, but the ones that are on other browsers were not blocked. That was my understanding, is that you just have to switch to a different ad blocker. Octavius also pays for premium? So, do you find premium worth it? You just watch premium so that you don't have to view ads on YouTube? Is that it? Wow, there's more of you guys that have premium than I thought. I would have thought that maybe one person on the stream would have premium. You say it's worth it because there's too many ads? That's interesting. I tell you, the whole evolution of cable and all of that. I remember getting cable because when I was a kid, my parents wouldn't let us have cable. They're like, there's too much bad stuff on cable. We're just not going to get cable. All my friends had cable. We didn't. So then when I was an adult and like I got cable and everybody moved over to cable at that point, my parents were like the last holdouts and they moved over to cable too. And I remember having cable. I remember having like the box that records shows for you too. That was great. And there being like 4 or 5 shows that I wanted to catch every week and you would never miss them. And that was great. And then Netflix took off. And by that point, man, what Comcast wanted was so ridiculous. Like you would get the introduction rate, right? But then after the introduction rate was gone, it was like 3 times that. It was like, well, this is reasonable at 150, but it's not reasonable at 500. So and that people always said, oh, call in and tell them that you're going to cancel it. And they'll usually try and give you sweeteners or give you back the introductory rate, right? So I tried to do that and the salesperson didn't do anything. So I'm like, fine, screw you. Last time I ever give Comcast money, right? So then I, like many people, just only did streaming on YouTube. Streaming on Netflix, right? And now it's like, well, you have to have Netflix and I have to have Disney Plus because the kids watch a lot of stuff on Disney Plus. And I also get Crunchyroll because I wanted to watch stuff on Crunchyroll, although I don't know if I take full advantage of that. But there's new episodes of the Spy X Family, so I have been watching that. And then what else? I don't think I pay for the Hulu right now, but sometimes my wife will want to watch something on Hulu and she'll add it. I want to watch the new South Park special, but that's on Paramount. I'm not going to pay for that one. And when you add them all together, it's like more than what the cable was to begin with. I got a call offer for Spectrum TV and phone, and I told the lady she was basically trying to sell me a VCR. Cable is dead technology. Yeah, it's a little weird, but look, the enshittification of the web, it's real. It's real, right? Like it's and not even YouTube is immune apparently. Because I'm noticing YouTube shows me more ads. It shows me more irritating ads. And the content that it tries to send me is more clickbaity than ever. It's like if you watch even one, I watched one video about guns. I wanted to know what's the difference between like a $300 gun and a $2,000 gun. That's a pretty big difference. Where is the money actually going into, right? And now it just shows me nothing but gun videos. So I watch them. I guess I've you know what? It's kind of weird being like the self-aware dopamine seeking ADHD junkie. I guess you say it. You know, it's like, doesn't matter what it is, as long as it's like a subject that I can like consume a bunch of information about and satisfy that kind of that desire. You know, it used to be that I think so much about it, but now it's just like whatever seems to be the thing, and there's content for it, I'm gonna go for it because it's not always there. But most of what YouTube shows me is so terrible. I both understand why they need to show us ads and confused by why it's so important that we see such a volume of ads. Well, but what would be volume of ads? Because to me, if I'm going to watch like a 5 to 10 minute video, I feel like 1 or 2 ads at the beginning should be enough, right? What I don't get is the ads that it sends me. So like on Instagram, the ads that Instagram shows me are always very relevant, and I will actually sometimes browse Instagram just to see what ads it will send me. And if it shows me an ad for something that I do think is interesting, I always click on it, if only to help the algorithm know what I would be interested in buying. But YouTube, I feel like that the advertisements I get on YouTube are never relevant. They're never relevant. And it's also like scammy nonsense sometimes too. They really aren't. You know, I think that this is maybe a large reason behind why Google in particular seems to be so triggered by misinformation. The reality is that misinformation is an objective threat to large tech companies that are making money from advertising and so forth, right? All of these things reduce the number of companies willing to advertise on a platform and the data that they can use to target users and give them the best ads. And because of this increase in misinformation, and now I'm starting to see stuff like artists are like, they'll put their artwork through this sort of, I don't know, algorithm that will like put little patterns that we can't see, but the algorithms do see. And it trains the algorithm so that when they generate stuff based off of that artwork is just garbage, right? So they're trying to do all of this stuff that's like automated AI stuff on all of this data. And so now people are intentionally feeding these algorithms garbage so that it's useless to them. And then that hurts YouTube's bottom line, right? You get ads for Chinese stuff. Ads on YouTube can be disgusting. I feel like they want to pressure you. You need to buy premium that way. Maybe that's it. Maybe. But I think what it really is that there's just absolutely no discretion, right? Like if I'm a TV network, you know, every advertisement that I'm going to put on my network, I'm going to review first, and I'm going to be very, you know, you can do that because there's only so much airtime, right? But on the internet, when everybody can come in and do an ad, they just do like the most basic of checks, right? And they can't come in and say, well, this product is trash or this is actually an outright scam. Because how can they determine that? They don't have the resources to determine that. But the alternative has basically been let everything through, right? And it's just, junk. It's just junk gets through. Okay, when you build your models, do you include liquidity? So I have not really built a model that really, well, okay, so I have models that are like trying to use the liquidity for signals, per se, right? But if I was to include liquidity, I think that the main thing that I would do with liquidity is based on the liquidity, I would size my trades differently, right? And most of the algorithms that I write are just all in, all out. That's an area of edge that I have not spent a whole lot of time trying to build, because ultimately for me, I want to be right. I want to have edge in predictive value. So, because that will translate over to my discretionary trading better. But if I had found something that I thought really, really worked well, then I would start, and it was sizing up, then I would start to use liquidity to try and determine which size it should be, or if I really want to use the signal as a filter, essentially. Well, so I'm getting another wave of selling in the treasury in the 10-year. It's not really affecting price yet, but it is another 5,000 contracts net sell. Yeah, the bids have taken a lot of big trades. But like I said, this isn't a liquidity hole. Now, this one might be it, though, right? Like, if we are going to go for another leg, I think that it's probably coming right here. It's just the timing of the trade makes me suspicious, so I'm going to pass on it. If there wasn't a Bank of Canada decision today, I would maybe go for it. But I'm too worried of what we had yesterday, right? Where I'm stuck in it. Maybe it's a little bit underwater and I don't feel like it can get out before the news. And then so I hold it through the news, and then the market moves exactly the opposite way through the new news and kills me, right? Felt like they want to pressure your need to buy premium that way. But like, do people really? I don't really feel like premium is a good value proposition. I feel like most people would just put up with the ads. I feel like that for me to pay for a service, that they need to be giving me content that I couldn't get otherwise. And I don't think that YouTube has a whole lot of that. Seeing a little move there in the dollar all of a sudden. The dollar's moving up. That could put a little bit more pressure on the treasuries. Yeah, in fact, there they go. 489. Could try as she goes here. It'd be funny saying that I wasn't going to, and then if I try and take it as she goes here. It kind of looks like it's going to come back. The 30-year really went too, by the way. 1 minute to the open. I kind of feel like it's worth a shot, but it's behaving a little odd, to be honest with you. It's not like there was a big fall in pressure there, but they're not like following through with it. Okay, there's a little bit more. There is an iceberg at O2. Okay, there's the open. A lot of changes here in the level 2 all of a sudden. But that O2 not pulling back out of the way and they're not hitting it again. Yeah. See, I took one there trying to catch the edge and it I didn't catch the edge. Still some people over in the micros willing to trade it though. So it kind of looks like maybe the dollar's not completely cooperating. The 6J's not completely cooperating. Okay, there they took O2 offer. Not a strong offer, but okay, that's a little better. Now the 5-year leading. This one's a little interesting. I mean, we are basically through yesterday's lows now. There's evens below us. There's lots of single prints. 29.5, 25. That was a decent break, though. I don't feel like I got paid too well for it, but decent break. I was only by a tick, though. Because you could say that break of a 1/2 didn't seem to trigger a whole lot of stops yet. There we go. There we go. So that one kind of looked like one guy panicking. Good. There's evens. Not as... Oh, actually, 3,000 net evens so far. Well done. That was a little nerve-wracking, but that's probably just because I'm nervous from having taken some bad trades lately. But it's not giving me 10 ticks, right? So I'm still nervous about, like, do they stop at evens? So it looks like there is some liquidity there as we would expect. So it may kind of chill here for a little bit. But it is also like it's all within the time frame of like it's a large sell meta order. So like, I don't know. The issue is okay, it stops at 106 even. And then we have a Bank of Canada decision, right? which could be dovish. So E-mini's selling. So it's interesting that it seems like the ES goes first before the treasuries start to sell through. So I'm concerned there's some like degrossing going on in the markets, that people are like reducing exposure essentially. Well, geez, how low can the E-mini go? Yesterday's low was 42.42, which is just another little bump. So let's keep an eye on the E-mini here when they trade that. So there's them trading that. Okay. So I was wondering if there was going to be like a cascade of sell orders, but I'm not actually seeing that. In fact, I'm maybe actually seeing a little bit of pushback now. Like there's an iceberg at 43 now. Okay. Not entirely clear if they're done over here in the 10-year or not. There's definitely been enough volume at evens to create a liquidity hole and kind of hold things up, but they seem to still be moving freely. You tried the Norton method? Well, kind of, I guess you could say. I certainly done sit here for years and years trying to just scalp, but I'm familiar with his original course and with the ideas and concepts and so forth. And I just don't feel like that there's a really good market available to me to really try that in. Although I do find that it has really helped me here in these micros. I don't know if I would be able to trade the micros without having read that. Pretty big icebergs here in the E-mini. They did give me 10 ticks. So if this comes all the way back, I can't complain because I could have had the limit order there and it would have gotten filled. Okay, is E-mini gonna fall further? Looks like they still got some liquidity to push through. I think we get 105.5 on ZN. Oh, I don't know about that. When you say 0.5, you mean 16ths? This right here in the Treasuries looks like backwash to me. But we did see the dollar do a big up and reverse sort of a thing, so. Some liquidity on the offer. 1. They are able to get through it. Maybe some covering. Still a lot of volume popping through here in the E-mini, and it's a pretty aggressive sell. This move down in the E-mini eclipses anything else that we've seen in the past week or so. Easily. I am seeing the book thicken up a little bit down here. It kind of looks like some steepening though, because you see how the 30-year is kind of not backing off. So it's like they're buying the 5 and 10 and selling the 30. And on this move lower, we did see the yield curve steepen. Say that KRE is getting crushed. Can you share your chart? Oh, I'd rather not right now. It doesn't look very good. Like the last month, it's pretty bad. Maybe when we're out of this. Yeah, the KRE getting crushed here is not necessarily conducive to our trade, is it? Also, seeing the dollar come back here is not useful. Not helpful, rather. Okay. So there was some liquidity at 0.5 that just like disappeared. We'll see if 0.1 does the same thing. And bet that a lot of these big ones down here are going to be fake. Nah. Change the music, it's awful. Sorry, we'll just listen through it. Okay, now the E-mini is very clearly through the previous day's lows. Are we getting to some lows from... Well, okay, so now you'd have to go for the Friday's lows, which is all the way down at 42.15. So I'm a little suspicious of these orders because, like, why show them? If I'm a meta order sell and I'm just backing off a little bit here, then I'd be like, oh heck yeah, 12,000 contracts to sell into. Great, now I'm done. Boom, perfect. So it maybe makes more sense that it is somebody buying and they're putting the orders there like, yeah, I'll take them if you give them to me. But we'll see if 0.5 ticks down and 0.1, they actually trade 3,000 contracts or not. The E-mini is also getting to the point now where you could actually start to see flight to safety in the treasuries. But okay, so there's 1,000 pulls when they ticked down. Nothing's hit it yet. Okay. It's another big iceberg in ES at 33. Okay, so 01 finally goes offer after 2,500 contracts. Yep, and a lot of the liquidity at 0.0.5 is disappearing now. So, see, that wasn't bad, but I'm a little nervous because, like, we've got, like, what, 10 minutes left here. Seeing call buying in TLT. We're definitely seeing like some very, very tepid signs of support here. It's just sometimes that will just like evaporate real quickly, right? Yeah, at evens, the stack is getting bigger. I think the thing though is that like we've had a pretty big sell meta order here throughout the day, and we still don't really have a very good reason for why it's coming through. I suppose the Bank of Canada could come out and be hawkish here, and then we'll be like, oh, did they know something? You know, that's always one that we got to consider. You see that? He took the 2,000 on offer and then he bid another 1,500. Okay, you know what? Maybe you're right, Uzi. Maybe first last is Salim. That kind of seems like something Salim would talk about. Salim always wants to talk about other people. I tell you what, though, I definitely wouldn't want to be the one that was saying go long on ES this morning and getting right. Because this little move down, this is 20 points. It's not trivial. It's not like crazy, oh my gosh, but it's still pretty ugly. So the flows still look short. So I kind of got an issue here. The flows still look short, so I think that from a long-term perspective, we could probably hold this. But do we really want to hold it through Bank of Canada? Is the problem. I feel like if we're going to be degenerate once, we should at least be degenerate twice, right? Or be degenerate until it works out for us once. I don't know. Let's see here. They're expecting no change. Bank of Canada will run the stops. I kind of have to wonder, like, this seems like an unusual amount of activity. For seemingly no catalyst. So are they trading for the Bank of Canada move? He nibbled a few long. Yeah, I would say like, well, the thing that I'm seeing is there does appear to be some support, which is to say that once we touched the 106 evens, that liquidity on the bid has materialized. It pulls a little bit, so there's a little bit of shenanigans, but you still get decent amounts that trade on there when they hit it. The order flow continues to be net sell, but it's holding the price there, right? But the thing is you're not seeing that convert into orders long pushing us back, because you'd be in a situation where, you know, they could push back and probably push back to the open, but the market buys are not coming, right? Eyebrow sells are down in Canada. What? Oh yeah, well we'll see here in a few minutes. I think that you probably will see the book thin out. Gold and silver are, yes, gold and silver are like taking off. Originally they sold in sympathy with the treasuries, but now they're actually diverging from the treasuries. They're just pushing to new highs as the treasuries sell. I'm starting to get concerned that gold and silver may be happening because investors are expecting stagflation again. And if we get into the stagflation where it's like nobody wants to buy treasuries and they buy gold and silver, if that really takes hold and sticks with us for a long time, that could cause a lot of chaos, right? When we had it before, you saw gold and silver like take off, but it was very brief, and then they gave up all those gains, and it was bad ever after that, right? Her 30-year yield rises 10 basis. Has it really been 10 basis points? I guess maybe it has. Oh, they're able to get 0.5 to go offer, but it doesn't look like anybody's interested in doing anything too big right here. You're right, new home sells in 5 minutes. I'm worried that my news squawk is not working, because I should be hearing him right now, right? Maybe if I turn on tick strike here. See, I'm not hearing anything from there either. Oh, yeah, that would do it. Well, that's no good. Ha. Wait, were you hearing that? Okay, we're good. We're good. So trying to analyze that last little move there. It looks like the dollar came back down there a bit and the S&P 500 recovered, and that was why they kind of flipped there. I think the number of home sales will be lower due to high prices to cover high interest rates, plus lots of inventory not being sold. Well, so new home sales change month over month. They're expecting spot 7%, but the month before was negative 8.7%. I actually suspect that it might be a slightly negative number, so I agree with you, Walter. I think that new home sales is likely to be under expectation. But I also suspect that the Bank of Canada statement might be slightly hawkish. I don't know. There's the liquidity. After 1 minute, the liquidity reduced, or at least half of it. Well, I think I'm committed now. Okay, the liquidity over here is disappearing. Uptick. Here we go. See, sometimes this Bank of Canada is just nothing. Okay, so they say no change. They sell. Curious. New home sales changed 12.3% versus an expected 0.7%. That is not good. I think that move down was reflecting the new home sales change and not anything about the Bank of Canada. But I think that could push us to new lows. Let's see. Oh, there's some stops. Look at that. And at the same time, in the statement, they're talking about that housing prices remain high. So now we're at 30. Oops. Okay, so we just touched one of our kind of key levels. 25 is kind of the next benchmark. 25 would be clearing with all of the upside action that we saw on Monday. A 12.3% change in new home sales seems a little. Let's come over here to US. Wednesday new home sales. Yeah, that's pretty high. Considering how high interest rates are, that's not where the Federal Reserve wants to be. It's not, it's, you know, January, there was a pretty big outlier too. About equal. Actually, January was slightly more than this one. This is a sign of a hot economy. There are rising rates at 20. Oh, geez, up delays, not 20%. Where Bill Ackman covered on Monday, that location 5%. Do we get down there for Zen? Maybe. So we did get like the big sell, and now the market is trying to equalize here. So I'm not seeing like them continuing to try and push. I'm also really surprised that after all of that to push to new lows that I only got 10-20 ticks off of it, considering that yesterday during much less significant action I got like 30. Yeah, never take profit. I was waiting. Yeah, it come back too fast. I don't think I really have a good excuse for that. I guess ultimately off of what I just saw, I've kind of expecting them to continue through. They should be able to move through this area pretty freely. So but I do often start to run into this situation where like my MFE is okay, but I'm not getting those, you know. Right? Like I'll get on average 20 ticks MFE, but my average profit is not 20 ticks. But I don't know. I think that there could be more in this, to be honest with you. I do feel married to the position. Don't tell my wife that. She make her jealous. Oh, Zien, you're the only love for me. Short Zien, of course. I don't know, guys. But back to what I was saying. Don't you feel like that the change in yields was a little mild considering the information that we just got? Because yesterday, that was like a 30, 40 tick change down, right? Now we got more kind of, I would say, hawkish news. And I felt like things barely changed. So does that mean that there is still good supply down here, or are they just dawdling and eventually they're going to keep pushing? So we'll find out. The liquidity the bids all through here aren't very good. They've been trading this. They did the pullback. Everything that they've gotten to 31 essentially was basically there was nothing there, but they haven't been able to push through 31. There's like a line of support at 31. Come on. Try that again. There you go. ES is getting fast. Yeah, it is. Okay, here's the low again. Come on. There we go. I don't know, guys. I think that me in this position might have a wonderful life together. Only briefly touched it, so I shouldn't get too excited yet. Mary traded news to be divorced and take profit of it as it didn't have a prenup. You can have baby. Okay, yeah, that's I get what you're saying. We're making a deal. Octavius can have Zien, and I'll have the micros. Maybe we swap once a month. I'm not into that. I don't know. Nothing but trouble, that is. Oh, wait, I misunderstood the joke. Octavius is saying we're going to have baby micros together. I get you. You're saying that our children will be micro yield futures. Yes, I see. I see. See, this is the ADHD, and you're always slow on these kinds of jokes. Well, I hope you guys enjoy when you found me up like that, because baby micros. So if I'm wait, so I don't think that I could marry the 10-year, right? Because the 10-year is only like 2 years old. I could totally marry Zien though. She's a mature instrument. She's a mature instrument. I do think that futures probably age faster than humans. Like maybe it's like dog years. The 10-year is plus size. Listen, I don't like the super skinny. Like, you see these girls that, like, you can tell that they've never used a muscle in their life before, and their arms are like, how does your arm even move? I think that's really gross. A woman is supposed to have a little bit of fat on them, okay? That's the healthy thing. They're going to have more fat than men, at least. You're lucky you're not trying to make... Oh, I'd be terrible. You see, have you ever seen this guy? I forget what they call him, Daddy something, and his whole routine is basically just talking to members of the audience, and it's so effing hilarious. And he's so good on his feet, and he has so much riz, right? That is not me. That is not me. That is the executive functioning part of your brain is part of what allows you to be fast and effective in really fast moving social situations. And you can see where I struggle with that. It's probably the same thing with, like, you know, when a move happens very, very quickly and I'm not able to take profits on it, or I don't get out fast enough or whatever. I think it's kind of that same thing, is that it takes me a little bit more time than most people. Okay, so we are getting a little bit more downside action. I would say that I still feel that this is relatively tame compared to, say, yesterday's move and compared to the move in the S&P 500. The S&P 500 seemed to be very, very sensitive to that slew of releases. The bottom of the hour, we're going to have oil, and that's going to play a part here too. At the moment, we're seeing oil head down, and we saw oil move down yesterday, but you know, maybe the oil numbers would switch that. And if it was bullish, that would just make that would just make treasuries that much more bearish, right? Okay. You like the playlist? Well, go and thank Harris Heller. It's Stream Beats by Harris Heller. And he, when they started getting takedown notices on Twitch, he put together this library of songs and made it freely available to everybody to use without any fear of getting copyright strike. And it's pretty good tracks. We need more traders like I wish. Actually, we don't need more traders like me because I don't want the competition. I do wish, though, that YouTube, you know, promoted more content like ours and less content like all of the nonsense technical analysis that's out there, man. So somebody sent me a video in Discord that was like, here's something that you could backtest. And I was like, oh, actually, yeah, I could backtest that one. Probably doesn't work. So then I was like, hey, let's see like all of the top trading videos this month and see if there's anything else that's worth debunking in there, right? And most of them really weren't. But now I get the videos that are like trading strategies and stuff, and it is just such trash. These people, they make this video that's like, if you have this 5-minute moving average and this 10-minute moving average, and then you trade when it's above or below them, and then you make money. And I'm like, seriously, people watch this stuff? People really think that those strategies would be effective? Like, what? Yes, 97% win rate trading view indicator video. Yes, that's exactly it. And you know what they do? What they do is they just fit all of the parameters to the 1 year that they're looking at. And then it's complete trash for any other time period that you look at. I think I know exactly the video you're talking about. So when I went through, I was like, well, you need like 3 to 5 to do. And that was one of them. But the video that the guy gave me, there was another video that it showed up on my screen that I thought was kind of like, so one of the things is that people will say like, here's this trading strategy that works really, really well. And it's not really a trading strategy. It's just like really general tips and tricks sort of a thing instead of a strategy, you know? That happens. Most videos are like that, which was a little annoying for me because I wanted stuff that was back testable, but whatever. It's just, it seems to me that educating the public on like how to properly verify a strategy is just like a impossible task because people's natural instincts are just like the exact opposite of what you've got to do. People think that they're just going to eyeball it and see what works, and then it's going to continue to work forward, and it's not like that. You really need a lot of data and a very specific processes to be able to avoid all of the biases that certain backtesting methods introduce. What's this? Octavius, very controlled sell-off. Large traders were wearing camo. Oh, yeah, like there have been some big orders through all of this, but they haven't been very visible. I haven't seen very many big orders either. In fact, the big orders that I've seen since the news have mostly been buys. So the action after this news in the treasuries is a little unusual. So I'm having a hard time sorting out where the liquidity hole where things could rebalance might be at. But there is a decent amount of volume at 30 and 30.5 now, so it could be here. But it's basically bounced 3 times already. So it came down and it just kind of went lower, lower, lower. What's this I was hearing about McConnell? Oh, you know what? I haven't really had Twitter open here, so I haven't. See, because I was almost getting 10 ticks before the thing happened. So how is it that we are now like from 02 all the way down and I'm only getting... So it seems a little off, right? And it is steepening too, so it should be favorable to me. Yeah, don't let it. I'll definitely have to scratch it. The other thing I have to consider is I don't want to hold the position past my trading session. So I have 40 minutes. Okay, that sell seemed that tick down was fairly aggressive, but like there's a lot of pushback against it. Ouch. Ouch, 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 ouch. So there was a 5K offer there at 31, but they did get through it. SHC. Hello, that picture looks familiar. Profile picture. Kind of wondering if this is all the dollar. You know what else is curious is that through all of this, the Japanese yen has hardly moved at all. It almost makes me wonder if I'm on the right instrument. I'm on 6J1223. Well, holding it through for that tick lower, I think was worth it. But now I'm kind of wishing that I had gotten the $25 up here. Okay. So I would expect them to be able to go through 30.5 fairly easily. No? So I think what's happening here, gosh, dang, come on, 12? 120 to make that bid? Really? I did see the dollar swing wildly there too, by the way, but I think that you had some big boys, like this would normally be a liquidity hold. There's like two big traders kind of fighting it out in here. Okay, the News Squawk just said that the CBOE is actively investigating an issue in options. There was no indication of which instruments that affects, so I don't know if it affects us. Okay. Some curious flow here, still at 31, 30.5. Okay. Resender again. Lots of level 2 changes at the moment. There's another really big iceberg offer there, and they punched through it. Although the micro yields didn't react to that one at all. That's curious. In fact, the 30-year is pushing down. That is interesting. I have not seen that before. Is the 30-year going to go to new lows? Like the algos are trying to front run me. Take me. Am I gonna regret taking that off? So I felt like that I held that a little bit too long, and I am definitely seeing the signs for me to get out. So like so sign number one would just be that this is turning into a point of control, right? Like this is a local point of control. There's a lot of volume trading there. They've traded back and forth across it a really long time. I see it take it through many times. Wow. Okay, two ticks down now. Geez. Also, when we look at the chart, you know, it's been trading in a narrow range there for a while, so that does kind of suggest like liquidity hole kind of a thing. And then on top of that, these big trades in here. So like if there's two big guys fighting it out, I don't necessarily want to be involved in that. I looks like I could have gotten my $5 extra and then I would take it off. But I'm still of the opinion that I probably need to get out. I think that I could probably turn this into a swing trade. Like, I think that the chances that yields are higher tomorrow is pretty good. But I don't want the stress of maintaining a position and all of that. I think that catching a 20-tick winner, it doesn't completely undo the damage from yesterday. I think that's actually about half the damage from yesterday, which is why, again, I'm a little... I think that I held that one a little bit more than I normally would because I wanted revenge. You know what I mean? But I also thought this is a situation where yields should get pressured for sure. And I mean, we did get that. It's just only 2 basis points. It's kind of like, it's a relatable. Yeah. So you feel like, oh, if I lost $40 yesterday, then I should be able to get a $40 winner today, right? But for whatever reason, the volatility is just not there. That or we would have had to have gotten into it much earlier. I mean, I don't know. I could have taken the open, for instance. Okay, I was worried that because when I saw like those 2 ticks down, I was like, oh no, are they going to go and break the low? And I got out just before it did it. Ugh, but no, it didn't do that. It's still kind of giving me liquidity whole signs. Okay, so here's oil. And it's a build. Crude oil and gasoline are on builds, so that's going to cause them to sell. Or rather, they are selling in oil off of that. The treasuries don't seem to be reacting too much. Equities don't seem to be reacting too much. The dollar does look like it's... So the dollar is really interesting because, like... Is 10 cents really a huge deal? Not really. But the markets did seem to react when the dollar was doing that, but... It seems like the dollar's chilling out and might actually head back towards 106. Yeah. It's ugly AF. Like ZB's Delta. Oh yeah, ZB's Delta is really wild. You're right. Yeah. So like in ZN we get what we want, right? Consistent selling. It's not as high of an R squared as I would like, but it's pretty good. But look at ZB. Like through most of this. You know what that says to me though is that they're not, you know, whatever is driving things, it's not happening in ZB. ZB is just along for the ride. Because, you know, if you're able to swing that far in cumulative delta to get bars like that, that means that there's not actually that much real trade going on in ZB. So the same when you look over here in the 5-year, right? You're also not getting the consistent. It's only in the 10-year. But apparently that was enough for us to win. I don't know, though. I mean, I took a pretty big risk holding it through Bank of Canada interest rate decision in new home sales. So I kind of feel like that I did not get adequately compensated for the amount of risk that I took on. Maybe this 106 even is just too interesting to them, you know? Let's see here. I got out at 912. 910. So I would have been given up almost half of the profits again here. So that exit was, at least on the short term, is good. How do you make your cursor in NinjaTrader 8 move on all the charts at the same time? Excellent question. So when you come into the chart at the very top, there's a little symbol for the crosshair. And if you select it, there's off, local, global, and global no time scroll. And so what I do is I do global no time scroll. And what that means is that all of the charts that are set to global will show the cursor in the same spot. If I do global with time scroll, it will actually like scroll back to where I'm at, in fact. So yeah. Have you found any spot gamma stuff for ZN? Okay, good question. No. But there are the tools on the CME website. CME group, interest rate tools. So the thing, my issue, I don't actually think that it's as major of a factor over here in Treasuries, to be honest with you. Let's see here. It'll load. There we go. Oh, that's a new tool. So I think what we want to look at is the open interest profile. So this isn't as good as like spot gamma. Okay. But Oh, I know. We need to select product, interest rates, 10-year. Right? Nah, this is not the one that I want, because usually we'll have prices. Prices. Well, actually, maybe we go to TYX3. I click on that, then does it give me prices? Oh, okay. It does. From 112 to 105, that is way wider than I thought it would be. So they don't, the options don't think that they're going to get below 105. Actually makes sense. Like it should be really hard for the treasuries to get interest rates above 5% and hold them, at least in the short term. But the thing is that the spots are usually so far right. It's like every quarter to half a point, right? I don't know if the gammas change enough to really create the kind of like you bust into it and it just goes sort of things that you'd get in equities. But I guess we'd have to go. I think that spot gamma allows you to see it for all instruments. So I think if we had the subscription for that we would get that. But personally, I think that over in treasuries, all of the guys doing the basis trade and the CTAs are probably a much larger factor over there. So I'm paying a lot closer attention to the CTAs. I'm still on the lookout for this situation where if yields start to come back down in a meaningful way, that you could see those CTAs cover into the end of the year, and it could be a really ugly cover, right? Because they're just like everybody's short, right? But it seems like we would actually need some like actual data that's bearish on the economy, and it's just not coming. Maybe next week, man. Maybe next week on Friday it happens. But I'm thinking about this sequence of events that happened earlier today, if I should try and turn that into a video. I suppose if I find myself with the time, I should, because I thought it was pretty funny. Yeah, the max pain trade would be impressive. Like if they're, especially because like, well, there's a max pain trade on both sides. I actually think, okay, so if let's say, let's draw out a scenario here. Let's say that treasuries stay about where they are. So let's say 4.9. And we're at 4.9 next Friday when the non-farms jobs report comes out. Okay? And then the jobs report is another like insane beat. Okay? Actually, can we see what the estimate is yet? I don't think we can. No, we can't. But let's just say that it came out to similar to last time, that it's like a 300K change, okay? This market would flip out. Oh my God. I mean, we're always saying that when it comes to, but if we got as big of a win this next report as we did last report, yeah, interest rates would get painful. And I think that we would move, I think that we would move enough into 4% now that the cheapest to deliver change scenario starts to become realistic, right? So the cheapest to deliver scenario is that there is a certain maturity of treasuries that is the most efficient for you to deliver if you're going to deliver treasuries. And if that changes, then your hedge is kind of broken. So you're long the cash treasury and you're short the future. But if the cheapest to deliver changes, then that means that when the futures move, it's not moving as much. So it's not completely offsetting your cash treasury position. So you're going to have to come in and sell more treasuries to equal out your hedged basis trade. So we're already selling, and then all of these guys, it's a huge amount of guys, have to come in and sell even more treasuries. Yeah, the downside that you could see in treasuries at that point would be very, very ugly. And I think that we would very much be in breaking things territory, right? The regional banks would be getting slaughtered. The Bank of Japan would probably be trying to intervene in their markets. Like that would be really wild. Okay. Now on the split side, if we got into the scenario where we flipped enough around that the CTAs start buying treasuries because we got really weak economic data, I don't think that we would necessarily break things. I mean, that would be positive for a lot of portions of the markets to some extent, right? But if we all of a sudden got data that said we're going into a recession here, it would be impressive for sure, because you'd have all of those people have to unwind their momentum trades. And then on top of that, if it goes far enough, those guys with the basis trades may be forced out of their positions, right? If those guys were forced out of their positions, that would be like apocalyptic. But I think that it would have to be like a really wild thing. Like I think to get that kind of a scenario, it would need to be like Israel shoots a nuclear bomb at somebody or something like that, right? A nuclear bomb going off somewhere might be enough to cause that one. But just weak economic data, I'm not so sure. It would be a really impressive trade. And it might be one that you can hold, and then all of you guys that are long TLT will look like geniuses, right? So Uzi will be, I don't know what his average cost basis is, but, you know, he'll make a decent 20% return, 20-30% return on that, and then he can forever go on to CNBC and talk about how smart he is, right? That would be that scenario if we got that. So those are like some of the technical flows and positionings that we still have going on until the December expiration. That, you know, because look, these non-farms reports have been wild, right? So those scenarios are not as wild speculation as they might seem, right? They're very much possibilities. If you get another big win or big beat like we got last non-farms, then geez. But then we just have to return back to, does anybody believe those numbers anymore? I'm a little skeptical, to be honest with you. A little skeptical of some of the jobs numbers. Okay, well, so we got 15 minutes left. Let's take a look here. So, starting with ZN. We did get the little push lower, and then I started to see liquidity hole. We came back in liquidity hole again. And what I see is that when that move up occurred, that we saw the dollar retrace and come back a little bit here. So it seems like that the treasuries are done in rebalancing, and that little bit of a move up was mostly just the currencies. Okay, so maybe they go for new lows at some point. It's possible that you could still see some meta orders coming in and selling after the liquidity is recovered. But I think for me and my style of trading, that this is signs that I did good. I got the trade right. Okay, now oil on the gas change, there was a build on the inventories. They did sell, but like, look, they reversed that really quickly. So I'm not quite sure what the deal is with that. Maybe there's some nuance in the report that I don't understand. Gold had a really wild move up. Really, really wild move up, but it gave up all of those gains after the Bank of Canada and housing numbers. So the interest rates rising here really cut down gold. So that one seems like one we should remember, because that means that the whole real interest rates correlation with gold is still there, and that gold is probably rising due to other factors like Middle East conflict and flight to safety trades. Okay. E-mini, it looks like E-mini is probably going to recover some of this damage that they've done. I mean, that's been the way that it is. It's like, if you look at the open and close, it's not too bad. Like, if we come back here to the other day, like, okay, we managed a small little win on the day. But like the intraday volatility is like, oh my gosh. Oh my gosh. Okay, so I'm a bet that we do similar here, and that we maybe recover probably 42.50, if not 42.55, before the end of the day over there. Biggest loser, though, is wheat. Here's wheat. Well, that's the one we should have been trading. Look at that. I wonder what happens immediately. Is that like when wheat starts or something? Maybe need to go and look into the session information for wheat, because it's kind of weird that it started right there. Wheat down 1.6%. That's the biggest winner, or biggest loser. Biggest winner is gold at 0.3%. So almost everything is down today, essentially. Treasury is falling back a little bit. The 5-year is kind of falling back a little bit. So it seems like we may be getting some flattening coming through here. There could be another sell come. Like I said, I'm gonna bet you. No, I'm not gonna bet you, but I suspect that tomorrow we'll be seeing 493. Let's say 493 in yields. I bet you that they sell it overnight, and when we wake up, that we're like at 493. And if we're not, if we're like back at 485 tomorrow, then I'm wrong. But I'm not going to bet money on it, because then I'll just sit there and worry about it the whole time, right? Okay, so we still got some time. Let's see here. I'm an Ninja Trader 8 and Jigsaw user for many years. If you decide to test Atlas, let me know what you think. Oh yeah, I'll definitely will. We could even make a video about it if they really got good stuff, or they have good ideas, you know. They've spoken to me on email a number of times, so they seem like nice people. And it'd be very, very difficult to get me off of Jigsaw, though. Right? But you know what? If they, you know, if the platform is just so amazing, I could ditch Ninja Trader for it. Because that's kind of one of my issues, is that I'm not very fond of, you know, I love the software itself. I love the indicators that I've built for it. And I even like the company, like the people at the company and everything else. But their current strategy, like their current market strategy, is just not very well in line with what we need and what's best, you know, they're making it harder to integrate. They're making it harder for us to run a multi-platform setup or to use whatever broker that you want. You know, you just have to be like full on all in NinjaTrader 8, and I'm not willing to be all in NinjaTrader 8. Heck, if Jigsaw was doing that, I don't think that I could be all in Jigsaw. If they were like, we're our own broker now, and we're going to make it hard for you to use our software anywhere else. I'd be like, screw you. Right? So, we'll see about ATAS. I know that ATAS has a lot of really cool and unique order flow indicators, so we can have some fun looking around it. Wow. Court documents say an off-duty airline pilot said he had been struggling with depression and took psychedelic mushrooms about 48 hours before he tried to cut the engines on a flight. What? Okay. That's crazy. Don't do drugs, okay? I'm seeing a little bit of pressure here. It looks like the dollar wants to press again, and the treasuries are getting very, very sensitive to it. Not quite back to where we were, but if I was still in this, I would definitely be looking at like, oh, here's my perfect opportunity for me to get out. Well, I'd probably have to get out at 15 instead of 20. I feel like we're missing. Oh, well, you know what? We should set today's title. We could but make it a clickbaity title, but I don't think that would actually help us. I always set the most informational titles so that if I'm like trying to find the day again, it's easier for me to find. But if I can put something in there that makes people want to click it, then I'd do that too. I could just put today's video should be I married the 10-year. I married the 10-year treasuries. I could run all three platforms at once because I'm a DT and IQ feed user. Well, yeah. So if they ATAS, ATAS said that they have support for the rhythmic plugin mode, so I should be able to run all three platforms at the same time. Yes. So that's the other thing that keeps me out of Sierra charts too, is that if you're in Sierra charts, you have to completely buy into their ecosystem, and I don't want to do that. I want to pick and choose each little part. I guess most people don't want to do that, but I feel like that's the best situation, because ultimately the platforms are all very, very competitive, and so to differentiate yourself, you really have to niche down, right? And the issue is that, like, you might have a platform that matches you really, really well. Like NinjaTrader 8 matches me really, really well, the platform, but the broker doesn't. Right? That's why I think you need to have that flexibility. Yeah, Denali, well, it's owned by Sierra Charts, so you have to use Sierra Charts. So if I was going to use Sierra Charts, it would basically be all in Sierra Charts and their ecosystem and their data and their platform. And I'm just kind of like, No thanks. I probably should convert some of my indicators over into Sierra charts, because I'm sure that if I put them out there, that I would probably get even more people buy it than have bought it in NinjaTrader. But yeah, you say Sierra Zom sucks. I mean, it gets the job done. I think most of the people using Sierra charts would argue that point with you, right? It's definitely not as good as Jigsaw's, but it's got a lot of features, and you can definitely set it up to get the job done. Yeah, it would be like making the cost basis indicator for Sierra. The problem, guys, is that I'm just too busy. I'm super busy, and I have a short attention span too, so it's a lot harder for me to write things like that than it was 2 years ago. But maybe we'll do it. Maybe we'll do it eventually. I get some time and I'll be like, let's write it in Sierra charts. I would have to go and get, because that's the other thing, is to do it in Sierra charts, I would have to work out getting the getting some temporary data or something like that, because I'm not going to move over to them, but I would need to be able to use their stuff. I guess that's like the advantage of this on NinjaTrader, is I actively use these. I've been using them for years now, so these indicators are quite stable and reliable now. Okay, so the Treasury is back to where I got out. So yeah, I think I would be exiting right now and being like, oh, I really want to hold it more, because they might go for the lows again. They're so close. Well, I don't know if they can do it with the 30-year here is kind of not cooperating yet. It came down to even, so it could happen. But it seems like the 30-year is not completely cooperating. Wow, look at that. Strong take at 29.5. It didn't completely clear, but in a big stack at 30. Maybe they do go for it. We're gonna hold on for like another 2 minutes, but then I gotta go. I'm always down for a good stop run though. If they were able to break lows again, I think that you could get some pretty good stops to get triggered. Because again, I see single prints all the way down to like 25, so. Another little step lower. Could be fun. Could be fun. Kind of, I don't know about this one. That looks like you're gonna get icebergs on both sides. Like that again would be like a great spot for me to just exit the trade, right? WITI tumbles after surprise crude build production at record highs, except for that they've already redone that. House to vote on Republican Mike Johnson for Speaker. Never heard of him. Give me Chip Roy. I think Chip Roy should be Speaker. I like that guy. Why are you not running, Chip? See, Chip, this is exactly the problem. This is the person that's supposed to be, that should be going for it, doesn't want the power. Yeah. Yeah. Bill Blaine warns it feels like something has to give in the bond market. Well, I'll have to read that off stream. New home sales exploded in September as home builders eat soaring mortgage costs. Oh, we also missed Boeing stock rises despite 9th consecutive money-losing quarter, missing across the board and cutting 737 delivery guidance. Dude, how big is this iceberg gonna be? I don't know. I'll post in Discord, but it's time for me to get going, guys. I'll see you tomorrow. In the meantime, stay excellent.